Good evening, ladies and gentlemen, and welcome along to this IC Markets webinar, What Candlesticks Truly Reveal Pressure and Control. My name is Chloe, I'm with Trade with Precision, and I'll be with you for the next hour or so, having a look at the markets live and using that to really have a look at some examples of what candlesticks truly reveal pressure and control. Before we get started, I would just like to give you an opportunity to have a look through this risk disclaimer slide. So have a read through this over the next couple of moments, make sure you agree with everything therein, and then we can get started with the webinar. I also want to apologise if you do have any background noise leaking through. I have a little almost 2-year-old. It's his bedtime and he doesn't always go down willingly, so you might hear some enthusiastic wanting to stay up a bit later kind of noises from next door. Apologies about that. All right, so that should be enough time to have read through that slide. Before we fully get started as well, just for those of you who haven't attended one of these webinars before and haven't heard my voice before, a little bit of background information about myself. I'm a trader from London. I've been trading for 12 years. I currently trade the Forex. I am a technical trader. I would say 95% of my trading is purely based on technicals. That's a little bit of background again about myself. And as we go through the webinar as well, please do feel free to pop any questions that you might have in the questions box. I'll try my best to get to as many of those questions as I possibly can and answer them as thoroughly as I can as we go through. Any markets that you particularly want me to look at, then feel free to pop those in the questions box as well. So the agenda for today then, we are going to be looking at how market pressures are moving candlesticks. We're going to be looking at how to identify if bulls or bears are currently in control, and we're then going to kind of put that together into a way to find entries and exits using these insights. Because of course all the theory in the world isn't actually going to help us to make money trading. What we need to do is know how to actually find entries and exits using the insight from this webinar. Going to point 2 there, identifying if bulls or bears are currently in control. You heard me say that I am a technical based trader and predominantly a trend or momentum based trader. That means that the majority of the trades that I take are with the overall trend. Now, it will depend somewhat as to the time frame that I'm trading, as to what time frame I need to know if the bulls or bears are in control. Because obviously if I'm intraday trading on a 15-minute time frame, for example, then I'm more concerned about what the intraday time frame is telling me in terms of the bulls or bears. Whereas swing trading, I'm very much interested in obviously the daily time frame and also time frames up from that, so weekly and monthly time frames as well. Knowing if the bulls or bears are in control is absolutely key to my trading, because I'm not a market maker. I am simply trading in the overall direction of the major flow of the market. So I need to know, are the bulls or bears in control, because I want to go with whoever is in control. If the bulls are in control, then I want to be buying that market. If the bears are in control, I want to be selling that market. So it's essential for me to be able to work out if the bulls or bears are currently in control, so that I can work out which direction I need to be trading in. So that is predominantly what I will be discussing candlesticks for. So it is to work out if bulls or bears are currently in control. And of course, we can look at candlesticks across any time frame really. So from the monthly all the way down to the 1 minute time frame, if that is your cup of tea. The candlestick can tell you who is currently in control. So let's have a look then at the live market. Bear with me while I bring my screen up for you. Okay, just bear with me a moment. Okay, so you should now be able to see a view of my screen. I've got the IC Markets MT5 platform open. IC Markets do also have a web-based platform that you can use as well, which is super user-friendly and functional. I'm just using the MT5 platform today because that's what I have been using for the last kind of couple of months or so, and it works really well. And of course, hopefully you should be familiar with MT4 or MT5. They're very, very similar programs anyway. Okay, so what we need to know in any market is, are the bulls in control or are the bears in control? Where is the market flow? And the reason we need to know that is because the highest probability trading opportunities will be in the direction of the overall market flow, the strong market flow. Yes, of course, it is possible to make money in any direction trading. You know, there are people who do counter trend trading, for example, people who do scalping. So you know, the method that I'm going to talk about today is not the only method there is, but in my opinion, the highest probability and also highest reward to risk opportunities can come from trading in the direction of the overall market flow. So what do we need to know? Well, I'm actually going to start from the monthly time frame. Generally, at the beginning of every month, I do a market analysis for myself on the monthly time frame, just to see where everything is. How did last month close? How could potentially this month open? What do I need to see in order to be trading? Starting here with the US 500, the US indices have had quite a bit of retracement over the last few months. So we have pulled back. We had massive gains and really, really long uptrend coming into the top here. And ever since, so where are we here? We are right at the end of 2021, right at the beginning of 2022. Basically, from January 2022, the market has been bearish on the US indices, as well as other indices across the globe. And a lot of people have kind of started seeing that a bit as doom and gloom. Are we about to enter a recession, etc.? You know, won't we enter a recession? All the while that the market has been bearish on these US indices, what am I saying to myself? I'm saying to myself, what do I need to see in order to trade this market? Because it's all well and good predicting where price might go, but my job as a trader is to make money from the market. So what do I need to see? And I look candlestick by candlestick in order to determine, are the bears in charge or are the bulls in charge? And can I trade this or not? So for the last aside from this candlestick here, which is particularly indecisive, and this green one here, which is quite bullish. But apart from that, we've had 1, 2, 3, 4 strong selling candlesticks. So the sellers have been in charge basically since the beginning of the year. What does that mean for trading? Well, for my trading, what I need to do is find a trend within that. So I'm going to come back to what is happening in the current time, but first of all, I'm going to look at what has happened during that pullback. Well, on a weekly time frame, that does look like a downtrend, lower highs and lower lows on price action. Is that tradable? Absolutely, yes. In order to trade this, I would look at candlesticks and I would look at chart patterns. So chart patterns, let me just demonstrate. Not massively clean, but I would look at, for example, a head and shoulders pattern here, left hand shoulder, head, right hand shoulder. That could be one, and then a neckline down there. You could even look at left hand shoulder, head, right hand shoulder, with that being the neckline, probably even more accurate. My point being that really it's after the price breaks below the neckline of that chart pattern that I am then convinced of a downtrend. So really it's only after this point here that I properly start to look for bearish trades here as well, because it is potentially possible to trade down into the neckline as long as we're cautious about reward to risk. But either way, what is most important is in a downtrend, we're looking for lower highs and lower lows. So those are the lower highs and lower lows. What does that mean for trading? Well, I rarely actually trade on the weekly time frame. I would go down to the daily time frame, and on the daily time frame, I would be looking for my entries. And this is where potentially we can really start drilling into the candlesticks for finding entries. Paresh, in answer to your question, I don't personally hold on to any recordings of these webinars, but I do believe that you should be sent a recording into your email after the webinar has finished anyway. If not, then I will give you contact details at the end, and you will be able to contact customer services for anything that you need after this webinar. So I will give you those contact details at the end. So that takes us really down to what's happening right now and how can we potentially make money from this market right now? Well, looking back to the candlesticks. So yes, there was a pullback. Now, downtrend on the weekly time frame, that doesn't necessarily mean that it's going to be a downtrend forever, because let's look at what has been happening on these US indices. It has been a very, very, very long uptrend. And it's not unusual to have a pullback. On my chart here, I'm looking at the 50 moving averages, the red line here. And it's not unusual to have a pullback to the 50 moving average. It's happened over here, it's happened here, it's happened over here as well. So yes, there has been very bearish price action over the last few months, in fact, for the majority of this year. But that doesn't necessarily mean that selling is the only way to make money. In fact, what I have been doing all of this time is waiting for an opportunity potentially to become a buyer again in this market. Now, that doesn't mean to say that buying is the only way to make money. My point being, a pullback to the 50 moving average is normal on the monthly time frame. It doesn't necessarily mean that the uptrend is over. What it can mean is price has now come to a low point where potentially it could be a good opportunity to get in at a decent price, at a low price, ready for the uptrend to potentially resume. So what do I need to look for in order to give me an indication that the uptrend is going to resume? Well, on this monthly time frame here, this month here, June was a very bearish month. July, however, closed very, very strongly. So July actually came from opening at the bottom of the candle, and it closed right at the top of the candle and pretty much made back all of the losses from June, almost. So it's closed strongly and recovered all of the losses from June. So that shows a huge shift in momentum from the bears being in control to the bulls being in control. Now, I'm not going to use this webinar as an opportunity to educate you on very, very basic candlestick patterns. I think, as far as I'm aware, you guys are all slightly more advanced traders than that. So I don't need to start talking about candlestick patterns and you know what they're all called and things like that. Really, the names of candlesticks. The names of candlestick patterns are quite irrelevant to working out whether the bulls or the bears are in control. In short, a bearish candle that closes close to the bottom of the candle, that would mean that the bears are in control. A candle that closes close to the bottom of the candle, the bears are in control. A candle that closes close to the top of the candle, the bulls are in control. So we see here a huge shift in momentum from July. The bulls are now in control of this market. The candle is closed near the top. It's the closing prices of the candles that are particularly important. What's more, it is how price reacts moving forward that is equally important. So from July, whether or not price takes out the high of July's candle in the following month, that is an indication that actually the bulls were in charge in July, and there is now follow through. The bulls are still maintaining charge of this market. Because quite often what we can see is, for example, over here, let's say over here, so we've got a strong bearish candlestick closing near the low of the candle. Now, that candlestick is strongly bearish. It pretty much engulfs the entire of the previous candlestick. So that is strongly the bears are taking charge of the market for that month. This is a monthly time frame, don't forget. But what happens the following month? The following month there is a bullish candle, and that candle closes right at the top. It completely engulfs the previous bearish candle. That is another huge shift in momentum. So there's a big shift in the momentum from buyers to sellers, but then a huge shift in momentum from sellers to buyers. And what does that mean? Well, if we actually look at what's happening in the markets, what does that truly reveal? And this is where we talk about pressure and control. So in a bull market, the buyers are predominantly in charge of the market, but at some point, they're going to be wanting to take profits. So at some point, there will be profit taking, which can lead to either a slight pause or hesitation in the market, or a pullback in the market. Once that happens, there can be occasions where the bears then take over for a short period of time. So not only can there be profit taking that can start a pullback, but then people can piggyback onto that pullback and cause an even greater drop in price by becoming sellers of the market. But when the pullback is caused predominantly by profit taking, the pullback happens. But what happens is the pullback happens, which gives the buyers a better price to get back into the market. And that's why when there is a pullback, then quite often there is a strong buyer candle because the buyers come back into the market in force. And this is what we can see here with this kind of 3-bar pattern where we've had a bull market, we've had some profit taking, but then the buyers have come back in force. They've decided this is a good price to get back into the market. I still believe that price is going to go up and I'm going to make a profit to the upside here. And that is what's happening here. So this is a strongly bullish candle indicating that this uptrend is not yet over. And so for another couple of months, actually, it was possible to make profits buying this market. Now, what's happened subsequently is we've then had a few months of selling. Over here, what's happening right now, we have got this shift in momentum again from sellers to buyers, from bears to bulls, and potentially that market, those bulls are continuing to move upwards because we've had a bullish candle followed by a follow-through of the upwards move. Bullish candle followed by so far another bullish candle. Now, we're only a week or so into this month, a week and a half into this month, so it's far too premature to call this a completed monthly bullish candle. But so far, price has continued to take out the highs of the previous 2 months, in fact. So this suggests that the momentum is now back into the market. The buyers have decided that this pullback for now is over, and they're willing to get back into the market in anticipation of the uptrend resuming. Now, how can we use that to trade? I very rarely trade the monthly or weekly time frames, as I said. So I would be looking down to the weekly time frame just to see the shift in momentum. Now, as I mentioned before, we've got lower highs and lower lows here. Price here has now come up above that previous high. So we no longer have lower highs. Prices have come up and we've got a higher high. That's another indication that this downtrend of the pullback could potentially be over and an uptrend could be starting. So that's another thing that we can look out for, especially if this week's candle closes above the high, this previous weekly swing high. If this week's candle closes, which will be, we'll have to wait until tomorrow, but if it closes above, then that will be a strong sign that the bulls are still in charge of the market. From there, where do I find my trade entries? Well, what I'm looking for is I'm looking for a smooth uptrend on the time frame that I'm trading. So, for example, if I'm trading on the daily time frame, I'm looking for a smooth uptrend. I'm looking for higher highs and higher lows, and that's what I see here. I'm looking for, you'll notice that I've got moving averages on my chart here. The moving averages that I have on here are the black one is the 10 moving average, the blue one is the 20, the red one is the 50 moving average. These are just standard colours for these moving averages. The green one up here is the 200 moving average. So what I'm looking for is I'm looking for all of these moving averages to be aligned, by which I mean the shortest, the fastest moving average should be in an uptrend at the top, and the slowest should be at the bottom. Now, that's not entirely the case here, because you'll notice the green moving average, the slowest one, is actually still at the top. And that's because I'm looking for this trend very early on. I'm looking early on. I've had several months of selling. I've had a downtrend on the weekly time frame. I'm looking for the uptrend to resume, and that means that potentially early on in this uptrend, we have to be a little bit patient because not all the moving averages are going to come into alignment straight away. However, the 10, 20 and 50 are in alignment. They're all pointing upwards and in the correct order, 10 at the top, 20 in the middle, 50 below. And that's enough for me, given that I am trying to anticipate a return to the uptrend. I'm trying to get in early into this move. And I'm going with the overall momentum of the market and the fact that the buyers are in charge, the bulls are in charge this particular last couple of months. So how do I then use the candlesticks for my entry? Well, I'm looking for higher lows and higher highs. And as a buyer, what I'm looking for is I'm looking for a good price. As a buyer, I'm looking for a low price to get into the market so that I can make profits as the market goes up. So how do I know when that good price is happening? Well, that's why I've got these moving averages on my chart, because they can just indicate areas of equilibrium. And price will often return to those areas of equilibrium, and in a strong uptrend, it will tend to return to around in and around the 10 and 20 moving averages. So I can then use that as a guide as to where I'm looking for the candlesticks that I need to see in order to get into my trade. So the candlesticks that I need to see, if you remember, I mentioned that I'm looking generally for candlesticks in an uptrend that close near the top of the candle. That shows me that that is a strong candle where the bulls are in charge. Now, if I want to trade long here, then I want to be going with the trend, with the bulls, knowing that the bulls are currently in charge. Because then my trade has the highest probability of success if the bulls are in charge at this current time. So always what I'm looking for is I'm looking for a strong bullish candlestick. Now, we've got to consider reward to risk here as well, because the larger the candlestick, the more bullish it is, the stronger the bulls are at that point, but also the harder it is to get a good reward to risk trade. So there's got to be a slight compromise there, a slight payoff. So what I'm looking for is a small to medium-sized bullish candlestick. So this candlestick here, it is, I'd say it's medium-sized. This would be a large candle. These are large candles here. Large candles. So we do have some examples of large candles there. This one's it's definitely not small. These are small candles over here, but it's medium-sized, and that's okay for me. The reason I want it to be small to medium-sized is because I'm actually going to use this candlestick for my entry and my stop loss for my trade. So knowing that the bulls are in charge with this bullish candlestick that's closed near the highs, what I want is to capitalize on any follow through from that. So I would place an entry at the high of the candlestick with a stop loss at the low of the candlestick. And then if the bulls continue the move to the upside, if the bulls continue to be in charge, my trade order will be entered and my stop loss will be placed at the bottom. Now, this is important for a couple of reasons, because I'm trading an uptrend. I'm trading a series of higher highs and higher lows. So why do I want to get into the market here? I want to get into the market here with the assumption that this is going to be a higher low, because I want this uptrend to continue. I want to continue seeing a series of higher highs and higher lows. So my assumption is that this bullish candlestick is the bulls coming back into the market after this period of consolidation here. The bulls have come back into the market strongly. I want to capitalize on that. I am assuming, therefore, that this is the low of this particular swing. It's not quite so clear cut because this is more of a kind of sideways consolidation rather than a pullback as such. But I'm assuming, look, here's the low here. I'm assuming that this is now going to be the low. If price comes down further below the bottom of this candlestick, then I was wrong. I was wrong that that was the low. There are more sellers in the market. Price is going further down. And if I was wrong about that, then I don't want to be in the trade anymore. So That's the reason why I would put my stop loss beneath this candle. I am assuming that this is the low of this particular swing. I want to capitalize on the next move up if that happens, but if price comes down lower, then I was wrong about that being the low, and I don't want to be in the market until a further retracement and some more clarity. Perhaps price could come down again, who knows? Or perhaps price could just pull back a little bit further, perhaps come back to the 20 moving average here, and perhaps another buyer candlestick could give me another entry opportunity. So these candlesticks are a key to finding entries and indeed exits from trades. Now, we've looked at the exit as a stop loss if things go wrong. Candlesticks can also give an exit in terms of profits. If I'm trading long, then what I would be looking for in order to exit would be an indication that the bears have taken charge. So an example would be, let's see if I can find an example from over here. So we've got a few examples here. If I were to have entered a long trade here, for example, after this pullback, then an indication that the bears have taken charge would be this candlestick here. It's closed strongly, strongly bearish. This one as well. Strong bearish candle. So one can use those candles to give an indication of whether or not to come out of the market or perhaps take partial profits. Now, again, it's about follow through. So what I would be looking at if I had entered the market here, I'm looking for strong bullish candlesticks. So I've got 3 strong bullish candlesticks in a row there. I've made about a 1-to-1 reward to risk in profit. When I see this bearish candlestick, does that mean the trend is over? No, not necessarily. It's a pullback, it's profit taking. What I need to know is what's going to happen next. Are the bears going to take control of this market, or are the bulls going to get back into this market? And that is what this candlestick here shows. So actually after this bearish candlestick, there was a bullish candlestick. So therefore there's no need to get out of this market. Over here, bearish candlestick followed by a kind of bullish candlestick. It's got a long tail, so it's certainly rejected. The buyers have come back into the market, but certainly we're seeing lower lows on these candlesticks. The candlesticks are giving lower lows. So this is an indication that the buyers are now no longer in charge. The bulls are now no longer in charge. It's time to take some profits at this point. Let's look at a lower time frame because not everyone wants to trade on the daily time frame. So how is this going to work out on a lower time frame, and how can we use the candlesticks on a lower time frame? Let's go first of all down to the 4-hourly time frame, and this is actually the reason I'm using this market is because it's a market that I'm actually actively trading currently. So there may be future opportunities here. What have I got here on the 4-hourly time frame? I have got a clean, clear uptrend. Higher lows, higher highs. I've also got a horizontal level here. This horizontal level that has been broken. So in terms of finding trade, I'm looking for a pullback. So right now, the current market sentiment is bearish, so that the price is currently moving down, but only temporarily. The overall trend is up. All of these moving averages are pointing upwards. The monthly time frame is strongly bullish, weekly bullish, daily bullish. Apologies, need to get to the current price. Daily bullish. So the highest probability opportunities are potentially in the direction of that trend, the bull trend. The bulls are in charge of this market on the monthly, the weekly, and the daily time frame. So on the 4-hourly time frame, even though temporarily I'm seeing a pullback, really I want to be buying this market. So what do I need to see in terms of candlesticks? Well, I need to see evidence that the bulls are back in charge. And for that, I need to see a strongly bullish candle. But remember, there are two facets here. I want to see a strongly bullish candle because I want to know that the bulls are back in charge. But I want this candle to be of a small to medium size because I want the opportunity to make a high reward to risk for my trade. So, for example, here, that's a strongly bullish candle. It's a large bullish candle. It's traveled a long way. It's closed fairly near the top of the candle. But there's no way that I would use that as an entry because my stop loss would be all the way down here. My entry would be all the way up here. Price has to move a long way to give me my profit. Whereas this candle here, that I would say it would be classed as a medium-sized candle. That makes more sense to me because if my entry is at the bottom, stop loss at the top, by the time prices got up to this horizontal level, I've made 2 times my risk already. And then if price goes on further, fantastic, I can make even more times my risk moving forward. So both of these are bullish candlesticks. Both of them indicate that the bulls are in charge of the market at this current time, but only one of them really is suitable for, in my mind, as an entry, and that's because of the size of the candle there. It's a strongly bullish candle. It's an engulfing candle, which means it's, let's just make it a little bit bigger. It's completely engulfed the previous candle. In fact, it's completely engulfed the previous 2 candles. So the sellers have tried to push the market back down. The buyers have come in and said, no, we are in charge of this market right now. That is my potential entry order above the high, which then means if price continues to move up, I'll be entered into my trade, and I will make appropriate reward to risk because it's a small to medium-sized candlestick. So I'm looking for the same thing here. I'm looking for price to pull back down into the area in and around the 10 and 20 moving averages. What I particularly like about this is that I do have this horizontal level here as well, where price could pull back and actually coincide with this horizontal level and find support there. Could also come a little bit lower, back to perhaps this previous high, anywhere around this area. I would then be looking for a buyer candle, a bullish candle. And I would be looking for that bullish candle to be of a small to medium size. So as an example, I would be looking for something like that, something like that, something like that, something like that, something like that. So these are kind of examples of candles I'd be looking for. I don't particularly want to trade something like that. That is a candle that demonstrates that the bulls are in charge. That is a strongly bullish candle. The sellers have come down, tried to push price lower at the tail of this candle. They've failed. The buyers have taken control. The buyers have pushed price all the way up and it's closed near the top. So that indicates that the buyers are in control. However, the reward to risk on that particular candle is not particularly to my liking because of the size of that candle. So personally, I wouldn't use that particular candle as an entry, even though it does tell me that the buyers are in control. Now, what might one do when one is on a 4-hourly time frame and one sees a candle that indicates the bulls are strongly in charge of the market, but the candle is too big to make a good reward to risk on? Well, one might go down to a lower time frame still. So I'm going to mark that point in there. It is the 28th of July, so I'm going to go down to an hourly time frame and see if here we go. So on an hourly time frame, let me just get rid of that line there. So on an hourly time frame, I still have an uptrend. I've still got, I mean, it's not particularly clean, but I've still got higher lows and higher highs. I have had a pullback into this area in and around the 10 and 20 weekly averages. This price action is quite choppy around here, but here I have a strongly bullish candle. Price has tested these lows. The buyers are in charge. The buyers have closed the candle right up at the highs here. If I just mark in where the high and the low of that candle is, and then go back to the 4-hourly candle, you can see here that on the 4-hourly time frame, that candle is almost double the size of the hourly candle. But on the hourly time frame, there could be an opportunity there. So just because a candle is too large to enter on the time frame that you happen to be looking at, it may always be worth looking down to a lower time frame, because you can see who's in charge on the higher time frame. You can see that the bulls are in charge on the 4-hourly time frame, so you might be able to get a more accurate entry on a lower time frame. So you're still trading in the direction of the major market flow, but giving yourself the opportunity to make a higher reward to risk opportunity. Because if I just mark in, so that's approximately 1 to 1, that's approximately 2 to 1. So on the hourly time frame, I've made 1 times my risk in profit by the time I would have only just entered the trade on the 4-hourly time frame. And by the time I've only made half times my risk in profit on the 4-hourly, I've now made 2 times my risk on the hourly. So I'm still going with the strong direction of the market, the fact that the buyers are in charge on all of these higher time frames, but I'm honing in to find an entry on a lower time frame. So I hope that makes sense. If there are any questions, then please do feel free to fire away with any questions that you might have. We can go down the time frame still more. What I would say though is, if you're looking at a chart right in the present moment on, for example, the hourly time frame. So I'm looking at this chart on the hourly time frame and I'm not seeing a trade setup. Because in my mind, I know that on the monthly time frame, the bulls are in charge. On the weekly and daily time frames, the bulls are in charge. So I'm looking for long setups. And right now on the hourly time frame, it looks like the bears are in charge for the moment. Now that could be a pullback. It doesn't necessarily mean there's going to start a downtrend that I can trade. It just might be a pullback. It just might be some profit taking. So I don't want to trade short. What I need to do is wait for a long opportunity. That is not the time to go down a time frame to try and hunt for a trade, because that would be going against who's really truly in control of this market right now, which is the bull. So the time to go down a time frame is when you have an indication that the direction of the market flow, in this case, is bullish. It's an uptrend. And what I want is, I want the bulls to be in charge. So let's say, for example, at this point here, this candle here, the bulls are in charge of this market on the hourly time frame. But there isn't a trade there for me because I haven't had a deep enough pullback yet. I haven't come anywhere near my the moving averages that I use as an indication of equilibrium. So what could I do then? Well, I could go down a time frame still, and this is where I might find a trade. So on the 30-minute time frame, yes, there is a bullish candle there. The bulls are in charge. I want to take that opportunity. Whereas right now at the current time, I don't want to be looking for a trade on the 30-minute time frame because my hourly is not agreeing with what the major time frames are saying. Does that make sense? I hope that makes sense. So drilling down the time frames in this kind of methodology is not to try and make trades out of nowhere. It's not because I can't find a trade on the 4-hourly, therefore I must go down a time frame to try and find a trade there. Really, I'm using the lower time frames to go with the direction that I decipher from the higher time frames, and I just get a fine-tuned entry on the lower time frames if I couldn't get my entry properly on the higher time frames. So I'm going with that candlestick direction of the higher time frame. So where was that example? So with this candlestick here, it's a strong bullish candlestick. It's telling me the bulls are in charge. So my direction is long. So if I go down the time frame to a lower time frame, that's what I want to be looking for. I want to be looking for a potential entry long. On this particular trade here, on the 30-minute time frame, I'd put my entry just above the high of the candle, and I'd have my stop loss just beneath the low of the candle. Target-wise, I mean, that depends very much on personality and risk appetite. So target-wise, you know, you could be a more conservative trader just going for a one-to-one, absolutely fine. You might want to take half profits at one-to-one and then leave the rest of the trade to run further, perhaps up to 3-to-1 or something like that. You might want to go straight to 3-to-1 if you've picked up on a really strong uptrend and done your market analysis really well. But for the very basics, certainly entry at the high of the candle, stop loss at the low, either for conservative traders target one-to-one or at least take half off at one-to-one. And then you could also use something like the candlestick direction on this or a higher time frame to indicate whether you should potentially be scaling out or taking profits. So for example here, bearish candlestick, might be time to take some partial profits off, certainly around this point here, time to take some partial profits off potentially, because that's two. This candlestick here is green, but it is actually quite bearish because it's got a long tail up here, which means the buyers have pushed the market up, but the sellers have actually taken control and closed the candle further down. So that's an indication, not to just close the trade completely, but it's an indication that the sellers might be starting to come into this market, or certainly that the profit takers might be starting to come into this market. So I realise I've actually spent a huge amount of time on this one market. It's just because it happens to be potentially setting up quite nicely at the moment for trades. Other markets, we can look at candlesticks on any market. This happens to be an index market. We can look at them on forex crosses, on commodities, on cryptocurrencies, pretty much anything that you want to trade. I mean, you can see the massive amount of things that are available to trade here at IC Market. So you can choose anything you like. In terms of forex, dollar yen is another prime example right now of a strong bull trend that has been pulling back over the last couple of weeks. If you look at the monthly time frame, then we can see that the bears really took control of the market in July, because this candle has closed near the bottom. It's got a long tail up here, so the bears are in control of this market as of July. However, the fact that this is such a strong uptrend running up here, and of course coinciding things with horizontal levels on market analysis must always involve horizontal levels as well. There is the potential for this uptrend to resume at any point. So I am looking for an indication that the buyers are potentially back in control. So on a weekly time frame, this candle here, buyers are back in control here. However, we have not had follow through. So whereas on that US 500 market, we had follow through, there was a strong bullish candle followed by another bullish candle that took out the highs. So far this week, price has not taken out the highs of this bullish candle. So the bulls were in charge last week, but the bears have come back into play this week. So I'm not 100% convinced that this is the beginning of the return to the uptrend yet. So we just have to be a little bit more patient there. It could be worth going to a daily time frame and just having a look at who looks like they're in charge on the daily time frame. But right now, I'm not going to be picking up on any trades right here because I don't have full agreement across the time frames. In answer to your question, I don't believe these sessions are uploaded onto YouTube. I believe that the recording will be sent to you by email, but I will give you the contact details at the end so that you can make sure that you get hold of it. Just one more market really that I wanted to look at, which was Eurodollar, just as an example of another market that has been trending pretty strongly. Let's have a look at who is in charge of this market right now. Well, the sellers were in charge down here, but this last month, that was a long-tailed candle. So the sellers pushed the market all the way down to the lows here, but the buyers have made this candle close right in the middle. So it's not as strongly bearish a market as I would have liked to have seen if I were to continue trading this to the downside. Not only that, but on the weekly time frame, it now looks like the buyers are in control somewhat. The highs of these candles are getting higher. The buyers are taking out consecutive highs here, which means that the buyers are starting to come back into the market. Now, this could be just a pullback. The sellers could come back into in charge of this market. I think the point is there isn't a strong enough direction here. There isn't a strong enough candle on the monthly time frame. There isn't a strong enough candle on the weekly time frame to give an indication of direction at the moment. All we can go by is the overall trend, the overall flow of the market. On the monthly time frame is bearish. On the weekly time frame is bearish. We've got lower highs and lower lows. That is the overall market flow. So that is my bias, my overall market bias. And I'm looking for something that could be tradable in that direction. At the moment, I don't see it. So I'm going to have to just wait and sit out of this. So I hope that's given you an indication of how I use candlesticks to really decipher are the bulls in charge or are the bears in charge, and why is that important? And in addition to that, how to find entries using that information. So it's possible to find entries across any time frame really using this information, but my preference is to go with the overall market flow, with the overall trend flow, so lower highs, lower lows, or higher highs, higher lows, On top of that, with the candlestick direction on the higher time frames, monthly, weekly, daily, and then if I'm going down to the lower time frames, to make sure I'm not trying to find a trade for the sake of it, to make sure that I'm still going with the overall market flow. So let me just take you back. I know I did promise you those contact details, so let me just take you back to that. So hopefully you should now have that screen up with the contact details. They have, IC Markets have Twitter, they've got Instagram, they've got Facebook, so all the usual socials, the details are there. If you want to speak to anyone on the phone, they've got a fantastic customer service team, so please do take note of that phone number there. And those of you asking for an email address, the email address for customer services is there, support@icmarkets.com. So if you want to take a note of that and then drop through any questions you might have to their email, they'll be more than happy to help you with that. So thank you so much for being with me this evening. It's been a pleasure. I do hope to speak to some of you in the not too distant future at another one of these webinars. We're always happy to see the same faces again, as well as new faces. So please make sure you get yourselves registered to more webinars, and I will speak to you soon. Have a fantastic evening, everyone.